What's going on, guys? How are you? How are you doing? This is Shocks and this is ShocksCapital YouTube channel. Today, I want to show you a strategy that you can use in volatility indices on Deriv and make a lot of money. So this strategy is very mechanical. So what you need to do on this strategy is simple. You need to identify your structure. After identifying your structure, you identify your order block on the H1 time frame. After identifying your order block on the H1 time frame, you are going to wait for a refined order block on the M5 or M15. I like the M5 because it gives me a lot of room for price to move and gives me a very minimal risk. So what I'm going to show you here is how to exactly do what I've just explained. So if this is something that you want to learn, stick around and I'll show you how. So from the onset, right, what we need to do is simple. We need to understand that when price is moving up like this, right, we are looking for what? We are looking for order blocks. And our order blocks that we are looking for are areas in these areas where we are having an aggressive move that breaks structure. Then the last opposite candle before that aggressive move is what we are going to mark as our order block or as our demand or supply, depending on the trend that we are looking at. So here, this is an example of an uptrend, and the downtrend will be a mirror of that, right? It will be a mirror of that or an inverse of that. I think inverse is the right English, right? So it will be looking like this. So this will be the what? The downtrend. And on the downtrend, you are going to be marking bearish order blocks like this. And these are the order blocks that you are going to be trading from, right? So this index that I'm looking at right now is the volatility 51S index, right? And this is found on Deriv. The links to trade Deriv indices are in the description down below. But today I want to show you how to actually trade those indices. This does not matter if you have an account already or you doesn't, right? So let's look at this particular chart first, right? Price, what does price do? Price goes up, right, and breaks a what? Breaks this particular high. When price breaks this high, it comes back, leaves a what? An order block right here and goes away, right? That is perfect. But remember what we are doing here. We are looking at the major structures. We are not looking at these small structures, right? What we need are the major structures. So the major structures are these ones that I'm marking here. These are your major structures that you are looking at, and the movement that you are going to get from these structures are the movements that we are going to consider for what? For trades. And these highs are the highs that I'm talking about that are going to be taken out. And on the flip side, these lows are the lows that price should take out for you to consider a what? A move for that particular price. So you are not using this order block in this area. You are looking at this particular order block right here. And what are you seeing here? Price has taken out this one, this high, and has taken out, oh no, here it has created an equal what? An equal high. So this particular order block is what you are going to what? To be using to map out your trade, right? So if you go to the lower time from here, you are going to see that inside this H1 order block, you are going to look for a refined M5 order block. And if you find that refined M5 order block, you are now going to what? You are now going to be using that M5 order block to set your limits. So what does it mean? It means that when you are having an order block on the what? On the H1 like this. So let's say this is your order block on the H1. This is your order block on the H1, right? If you go down on the M15, you are going to see that inside this order block, you're going to find some movements like this, right? So these movements that you are going to find now in the M5 inside that particular order block now are the movements that you are now going to use to what? To map out your order block, your refined order block. Then what are you going to do after doing that? You are going to what? To be trading off that what? Off that order block on the what? On the M5. Your stop loss goes above the order block and you are going to be targeting the what? The H1 structure. And look at what you are getting. This is a risk to reward ratio of 1 in 6. It means that if you risk $1, you are going to win $6. And if you risk $100, you are going to be getting $600 if these trades works out well. So this is what you're going to be doing, and you are going only to be using the what? To be using the limits. You are not going to be entering at market here. You are not going to be entering at market. You are going to get the best possible entry using limits, right? So let's go to the 5-minute time frame here and identify these order blocks inside the what? Inside the bigger order blocks from the H1. So from what you are seeing here, this is the order block on the what? On the M5. So you mark this like this, and this is where your limits are going to go. So you are going to set your buy limits at this particular zone, right? And you are going to set and forget, right? You're going to set and forget, and this is how you're going to do it, right? So these are your limits right here, and you are going to what? You are going to put your stop loss just above that particular M5 zone. Then you are going to go for the next what? For the next low, or you are going to go for a fixed risk to reward ratio, right? If you go for this particular low, you're going to set and forget. And if price turns like this close to your take profit, right, you should be able to know that it's time to uh get out of that trade manually, right, as happened here. But this is how your trade would have worked out had you entered this with limits, as I'm saying, right. And you look at this other order block that you can see here, and from here you can see that this is the H1 order block. Inside the H1 order block, what we want is the furthermost order block, right, that is still not mitigated, and this is that order block. And if you look closely, you can clearly see that this price is actually yet to get to this particular zone, right? So there are no examples that we can get from there. Let's look at another example here. From what you are seeing here, this is the pink one is the H1 order block. So from here, we want the furthermost, which is this one, right? And as price gets to your what, to your order block, as you see like this, what you are doing is simple. You are just setting your limits there, and you are waiting for price to what? To come to you, right? You are waiting for price to actually come to you, and your stop loss goes above that what? That particular high or that particular wick, and you are going for the next low or the furthermost low, and this is how you are going to be doing it. And this is a simple 1 in 6, right? This is a simple 1 in 6. And let's look at this particular zone, and remember, not all limits are going to be what? Are going to be triggered. If you get 3 limits triggered in one particular week, you will be very, very good with that, right? So you don't want to be getting 70 trades in a week, right? You just want a sizable number of trades in any particular week, and you'll be good to go, right? You look at this. This is the furthermost. What we were looking for here is very simple. Right now, we are now going for what? For a buy. So it means that you're going to get your what? Your stop loss just below here, and this is how you were going to map up your trade. A simple 1 in 5, as you can see here, because you are looking at this one at this high. This is how you are going to look out at this trade. If you risk $1,000, you're going to pocket a cool $5,000 there. So this is how you are looking at it, and this is how you are doing your what? You are doing your homework. And look at this. This is another what? This is another order block that you are seeing. Remember, some order blocks are going to be taken out, and some order blocks are going to not work out. And look at this. You could have been in this trade, right? And if you had entered this trade, of course, you would have put your stop loss just below this one, just below this, and price would have taken you out at this particular zone, and you would have lost this trade. So you have to understand that this is not 100%, but this is very good, and you are going to lose some trades, but you are going to win more trades with this particular what? With this particular strategy. You see here, this is the order block, and this is a very beautiful sniper entry that you can actually use to what? To trade. So this is how you could have mapped out this trade, and this is how you could have mapped out your stop losses and your what? Yeah, this is your stop loss, and you could have gone all the way here, and you could have made your 1 in 6 as usual. So you should go for 1 in 5, because why? You are using the what? You are using the H1, and you are entering on the M5, which means you have reduced the risk significantly. If you have reduced the risk significantly like that, it means that you have more room to play with, and that is only an advantage to you as a trader. This works on any synthetic index, on Deriv, on any synthetic index, on any broker, but for now let's use this on Deriv. And be sure to subscribe to this channel. I will see you in the next video.